Welcome to a special Stammtisch hosted by a member of ours, Franz over here. I'm sure he will give us excellent insights into gold and what we can do with gold.
I'm a member of International Man Club since September of last year. I had a little presentation already on the January 12th of this year about foreign exchange, when I was telling that the dollar will go up and the euro will go down. But I was very surprised that it happened from 145.80 on the 12th of January to yesterday 119.80 and back now to 121 today. And I'm so sorry that you have not coming on the 2nd of May to read that, since the figures speak for itself, and you see where gold price is now and where it has been on the 27th of April 2001. Gold is not only recently in most financial and daily papers as an important investment medium, but gets month by month more respect as a last resort in times of growing uncertainty, devaluation of currencies due to political and economical unrest, resulting from the subprime crisis started in 2008. For the time being, the financial world is guessing for solid arguments about the outcome of the further development, deflation, or both. The collapse of the euro currency since late 2009 until now has caused a never-seen hectic in bailout strategies for countries like Greece, Spain, Portugal, and others. The latest one we heard early this week, Hungary, when gold jumped up to an all-time high of $1,254 per ounce. The downgrading by the US rating agencies for those countries and banks has ended up in a European Marshall Plan of 750 billion euro assistance for prospective country defaults. In the absence of such a European-wide bailout, all the involved investment banks across over the world would have to write off their bond holdings and outstanding credits, so-called the Club Med countries. So the Club Med, that is a common word for the southern, like Greece, Italy, Spain. The Club Med, by almost 25 to 35% of their book value, which is surpassing the sum of 1,000 billion euros. In a second phase, followed 1 week later, the European Central Bank has offered to all involved banks to accept unlimited amounts of bonds of all EU countries at par value against cash payment. That means European Central Bank in fact is printing money, banknotes, to refinance such risky holdings with investment banks. Furthermore, the IMF prepared to issue guarantees to Greece and possibly all other South European countries in case of an upcoming default. A panicking survival measurement of never-seen dimensions. The continuing devaluation of the euro, partly instrumented by short selling through big hedge funds, state institutions, and other market players, had an immediate impact to the price of gold. I think one can see that is starting January 1. The euro price from 140. Can you see that? Or do you see that, yes? And on the other side, the gold price against US dollar, not against euro. Against euro was even much stronger, yeah? That's against dollar. The flight out of paper money into safe haven gold is continuously taking place. The charts below of the gold pricing in euro, Swiss franc and US dollar are significantly showing the tremendous development of the valuation of this precious metal. So if you can see the next slide, yeah. Again, I start here with the year 2000 and showing every year we are now at 1224 tonight. That is in euro, so we are about 1,050 euro per ounce. It's okay for the next one. Here we see the kilo, that is the ounce price in Swiss francs. And the next one is the gold price in dollar per ounce. So as you know, the gold is always priced in US dollars. But we calculate in Swiss franc or in euro. As you are all aware of, one is today confronted with the fact that the horribly overdebited world is seeking for a resurrection out of the global bankruptcy. The cocktail of medicine to reach such goals is getting every day more problematic. What can be taken as definitive is a huge reduction of consuming in order to save, to reduce debts, and to survive in a strange world of growing unemployment. Such an environment is producing, in a first step, a very deflationary scenario of price falls. I was today asked by one of the gentlemen what I'm thinking about Australian dollar, because Finanz und Wirtschaft was quoting on Saturday that the Australian dollar will go down to 78. I say, I think Finanz und Wirtschaft is right, because we have a fall of the commodity prices. And there's also Canadian dollar and rand possibly will go lower. Okay, deflation means all the goods are cheaper. If you find now big cars with no mileage on it, you can buy for 20, 30 and 40% discount. Nobody want to buy them. Further deflation I see in travel and holiday expenditures and many other consumer goods. At the same time, the reduced tax income to states and cities is producing a huge deficit of spending money for infrastructures and urgently needed support for social welfare. More and more institutions are confronted with the inability to survive in this complex world. 4 generations are gone since the last big depression in 1929. It seems nobody has any vision to bring the world out of the doldrums for the time being. All the governments of the industrial world are fearing about deflation. Such a period is normally lasting around 12 to 18 months and will be followed by a controlled inflation scenario. One must understand the state and the governments have no interest to have price going down all the time. So they will come later on with price and interest rate increase. Therefore, and for the reason of money printing in a never-seen volume, one can assume that after a deflationary time, big devaluations of goods, homes, equities, and so on, a price inflation will take place. Interest rates will rise. First signals are already seen, what will at the beginning produce a number of new losers, which are by then short-term financed. In a period of uncertainty, fear, and the prospect of huge capital losses, gold is probably the only fungible but most common asset to endure a time of political and economical stress. Gold is by history the only asset which gave human beings repeatedly a treasure of security, stability, and protection. Such times we are in today. All pragmatic promises are valid nil against a real gold bullion or a gold coin, which represents value and prosperity. When paper money is no more accepted, there will be always a market for gold. For an investment guidance, one has several ways to participate in gold purchases. The most common but highly recommended one is to buy physical gold in bullion or in minted form. In Switzerland, we are better off against many other countries to find good quality minted gold, like Krugerrand, 1/4, 1/2, and 1 ounce, Vreneli of 10 and 20 francs par value, bullion gold from 1 gram to 12.5 kilogram standard par, and many other denominations of coins issued by states and national banks. In Switzerland, you can no more buy the gold at Swiss National Bank. You have to go to a Swiss Mint in Bern, which is also an outsourcing, but is owned by Swiss National Bank. A reasonable way to build up a collection of coins is to buy every month a number of gold coins. Don't buy any metals which have no market but should be recycled into pure gold with one of the 3 gold refinery firms in Switzerland. Everybody has the freedom to, if he has gold, to send it to Valcambi or other refinery company. He gets a refining statement what was in gold, platinum, silver, copper. Better sell it directly. If you have to sell gold or silver, go to the refinery company. So you don't have to. This is a few remarks I have write down, which one can share with today's time. One is Zürcher Kantonalbank. They have exchange-traded funds in gold, silver, palladium, and platinum. And I think by latest report, Zürcher Kantonalbank is the biggest ETF fund now by volume of gold. By costs, you must think that you pay a commission when you buy the ETF. You cannot get the gold delivered because with the ETF you have to, the minimum delivery from the bank is 12.5 kilogram, which is about, how much is that? 550,000 Swiss francs, so nobody buys that. I